This series looks at the very best data or indicators for crypto trading. I'm not talking about charting stuff like RSI, Bollinger Band, or stochastics. We're going for indicators created with on-chain data, so specific to transactions of Bitcoin and cryptocurrencies. The very first one that you need to know about is reserve risk. It's a surprisingly simple but powerful concept created by an analyst at Ikigai Research. Basically, it looks at the behavior of hodlers relative to the price of Bitcoin. We could go into the math, but if anything, I'd rather dumb it down to just what it looks like and how to use it. By looking at the movements of coins on the Bitcoin blockchain, we can identify addresses, investors that keep coins long-term. Those are known as hodlers. We can then observe how big the stack of coins they're holding is, if it's increasing, or on the other hand, if it's decreasing, because hodlers are losing confidence and moving said coins. This is in itself an indicator, known as hodl bank. Now, the brilliant twist of the reserve risk indicator is to relate that hodl bank, that indicator of long-term holders, confidence or lack of confidence, to Bitcoin prices. This then creates a line that goes from too high to too low. And let me explain it and give you some example. If it's too high, it means that the confidence, the holding on to coin, isn't great relative to how high the prices are. This means it's probably a decent point to sell at. Another way of explaining it is that when the indicator is high, long-term investors are starting to move to sell coins, and it means that prices are getting a bit too good, a bit too high. Yet another way to describe it is to say that the confidence in higher prices is actually lower because long-term investors are starting to take profit. They're not so confident that we will go any higher because the prices are so extended already. Essentially, when the line is high in the red zone, we're getting overheated and we might be due for a cool down, basically a pullback, and you might want to take some profit yourself by selling. On the flip side of that, when it's too low, it means that those long-term holders just won't budge. They're not releasing any of their coins and the prices are already really low. You can kind of imagine what's going on through their head. Prices have gone down so much that now they're committed to hold on to the end, to the bitter end. But so it means there aren't many coins in circulation anymore, not many coins being sold. And the indicators relate the prices as well, right? And it's saying that if there's confidence in holding, people aren't selling, and the prices are low, it's essentially an attractive place to load up, to buy, maybe to start averaging in. And so you can see why it's called also reserve risk. A big chunk of coins in existence are held by long-term, sometimes very long-term investors. And if they were to sell all those coins, it would have a very negative impact on prices, right? But on the other hand, if they were never to sell a single one, it would greatly reduce the supply and be very positive, very supportive for prices. So there's always that reserve of coin that can either support or undermine prices. But it's fantastic to understand where we are and what long-term holders are doing. To finish and give a reading of the current state in September 2021, we haven't seen extreme high readings since 2018, and we're still not seeing it. So this tells me we're not done going up. We were actually at extremely low readings for most of 2019 and most of 2020, and we're only starting to emerge. So we can take periodic looks at the chart and over time see when we approach the red zone, the overheated state. And when we do, we might enjoy the ride a bit longer, but it might be time to think of and put in place an exit strategy for maybe at least a percentage of your holdings. Now, on a cautionary note, Bitcoin has only been around for 12-13 years, so these indicators and the patterns we think we see might prove to be very wrong in the future. But even with that in mind, I think it's very useful to have models to gauge market sentiment and adapt our investments accordingly. The indicator is available on Glassnode, that's where I first found it, but it's also on lookintobitcoin.com. If you have any questions, you can comment below. I actually reply to all comments on my video, and I'm very happy to give more explanation or clarification. Also, if you've watched this video so far and you've enjoyed it, please like, please subscribe, please share. It helps loads with the visibility and also means you'll be updated when new videos come out.